Welcome to the Invest in Value channel. I am Victor, and in this video, I'm going to review Jack in the Box and see if this is a good investment. Jack in the Box, as you likely know, is in the quick serve restaurant business with drive-thrus at their restaurants, so you can go in and get a quick bite to eat. Their food is delicious, and they've been around for a long time. I like to look at an investment and score that investment to see if it's a good one. First, I want to see that I am getting a discount on that investment, in this case, a share price. Is the company well operated, and are they performing well? And then last, is it the right time to buy this company? Before I jump in and analyze Jack in the Box, do me a favor and like my video, consider subscribing to my channel, and hit that bell if you want to be notified when I create new videos. Now, let me tell you more about Jack in the Box. Jack in the Box acquired Del Taco, and that was a really smart move on their behalf. This gives them a very successful Mexican quick serve restaurant, many locations. It's going to enable Jack to expand revenues and have access to a very popular type of food. Jack in the Box stock hasn't been doing great over the last 5 years. If you had bought Jack stock 5 years ago, held it, you'd be down 15%. Over the last year, if you had held the stock for 1 year, you'd be down 26%. But more recently, I started buying a couple of months ago because I wanted a few restaurants that I feel are going to do well in a recession. And Jack in the Box really looked good to me. Also, I was tracking Del Taco as a potential stock I was going to buy, and then Jack in the Box acquired them. So they kind of snatched them up. It caught my interest, and I analyzed Jack and decided to start buying a few months ago. So I'm pretty much sideways on my investment and will be looking to buy more shares. Now let's take a look at what Jack is worth. I use my intrinsic value calculator that discounts future free cash flows into the present value, and then we determine what the company is worth based on those free cash flows. I am using their most recent full year. They generated $160 million of free cash flow. I'm going to use a 9% discount rate, which is a little higher than usual, but this is a smaller company, and I'm going to use a higher discount rate. The revenue growth. Now, growth in the next 5 years, I'm putting at 10%, which is what they've experienced over the last 5 years. More recently, they've grown even faster than that. Long-term, years 6 through 20, I'm going to grow at 5%. And with that in mind, and the growth that I've implied in the next 20 years of free cash flows, the net present value of all those cash flows is $2.4 billion. The market cap of the company currently is $1.9 billion. So it leaves a little room for a discount. Looking at a per share level, the value per share is $117 per share, and the stock is trading at $86.98. So it provides a nice discount at 35%. Jack's performance over the last 2 years has been really good. In the full year 2021, they grew 12%. This year, they're off to a little bit of a slow start of only 0.6% growth in their first quarter. They have kind of a weird Q1. It ended at the end of January. Their PE is 12.39, which is a nice PE in 2022. Again, they produced $160 million of free cash flow in the full year of 2021, and the market cap is $1.9 billion. Their free cash flow yield is 8%. Good solid yield, and they pay a dividend at 2%, so they can more than afford to pay that dividend and maybe raise it in the future. 2022 guidance, they acquired Del Taco, and this is going to expand their revenue. So I expect that the full year 2022 is going to have that lift of revenues from Del Taco. Those revenues were not included in this quarter, Q1. So I think that's going to lift their revenues, and that'll look good. The inflation is going to raise their prices on the menu as well as their cost. So they need to manage that well. But I think that also is going to raise their revenues. They've announced that they're going to buy back $200 million of their stock, which is more than 20% of their stock that's in the open market, which is a very big purchase. My outlook, this is a good restaurant to own in a recession. Jack in the Box food is affordable. Del Taco is affordable. As we head into a recession, I don't think anybody's going to cut back from buying at Jack in the Box food or Del Taco. In fact, people will probably start going there more often instead of going to more expensive restaurants or even cooking at home, which is rather expensive. This stock has good upside, so the stock price could go up, and it pays a good dividend over time. I'm going to be buying more shares. I just started a position in Jack just a couple months ago, and I like to average my cost into a stock. So I started with a small position, and I keep buying on significant dips, and I'll continue to do so on Jack. So let me scorecard Jack in the Box. First, are we getting a discount? And absolutely, you're getting a good discount on this restaurant. The restaurant is well operated, real profitable, very good acquisition of Del Taco. So I give them a check mark there. And it is a very good time to buy, especially before they start reporting with the Del Taco revenues and numbers, which is really going to lift, I think, the company's profile. This video is for entertainment purposes only. I'm not recommending that you buy Jack stock or any other stock or security. I like to share my experience as I invest in companies. In this case, I'm an investor in Jack, and I hope you found it interesting. Thank you for watching my video. Do me a big favor and hit the like button on my video. Consider subscribing to my channel and hit that bell if you want to be notified when I create a new video. Thanks again for watching, and good luck trading in 2022.